What's going on, future accountants and accounting enthusiasts? In this video, I want to share with you guys the secret to acing your accounting courses by understanding the relationship between debits and credits, the accounting equation, and the double entry accounting system. So if that sounds appealing to you, continue watching this video to the very end. So understanding the double entry accounting system is incredibly important if you hope to understand and ace your accounting courses. If you don't understand the double entry accounting system, accounting is going to be way more difficult and challenging than it needs to be. The problem is that a lot of colleges and universities don't spend a lot of time really teaching the mechanics of the double entry accounting system. So if you don't get it at the start, you may be left behind and end up dropping your courses. And this is why a lot of students end up dropping their accounting courses, because they don't understand the double entry accounting system, which forms the cornerstone of accounting. If you don't understand this, everything is going to be very challenging for you. So myself, I didn't really get it completely until I was halfway through my accounting coursework. But once I did, everything just came together. Everything became more intuitive and everything clicked. And I began being able to successfully ace my courses. I became the top student in all my accounting courses. So it's really important that you are able to understand this conceptual framework of the double entry accounting system, the debits and credits, and how it intersects with the accounting equation. So, guys, stay tuned and let's learn together. The accounting equation is the foundation of the double entry accounting system. Every debit entry must have a corresponding and equal credit entry. The accounting equation shows the relationship and how the accounts must balance. The basic accounting equation shows the balance sheet account relationship of how assets must be equal to liabilities plus equity. An expanded view of the accounting equation provides more details showing the relationship of income statement accounts, expense and revenues, and draw from owner. Draw plus expenses plus assets must equal to liabilities plus equity plus revenues. The accounting equation also shows the relationship with debits and credits. The natural balance of accounts on the left of the equation, draw, expenses, and assets, is a debit. Inversely, the natural balance of accounts on the right of the equation, liabilities, equity, and revenues, is a credit. The natural account balance is simply a concept that tells us typically a specific account should have a debit or credit balance. Accounts on the left side of the equation, draw, expenses, and assets, are increased by a debit entry and decreased by a credit entry. Inversely, accounts on the right side of the equation, liabilities, equity, and revenues, are increased by a credit and decreased by a debit entry. I want to take a moment to make it absolutely clear that debit and credit is not synonymous with increase or decrease. Debit and credit simply means left and right, and signifies which side of the ledger the transaction is recorded. It is also unrelated to debit cards and credit cards, or cash in the bank or money owed. So get that relationship out of your head if that's something that you're thinking about. Another way to look at the accounting equation is that the left side represents use of funds and the right side represents source of funds. So draw, expenses, and assets is how you spend the funds. You may have spent it on inventory, computer equipment, property, office supplies, or any range of expenses. The source of these funds are liabilities, equity, and revenue, which can be loans, owner investment, or revenue generated by the business. A highly effective mnemonic to help with memorizing the accounting equation's relationship to the double entry accounting system, the debits and credits, is DC Dealer. DC Dealer stands for debit, credit, draw from owner, expenses, assets, liabilities, equity, and revenues. Make sure to memorize this. It's worth saying it again, so DC Dealer, memorize this. Shout out to CPA Strength's YouTube channel, where I was first exposed to this mnemonic. The mnemonic DC Dealer showcases the relationship between the accounting equation and the double entry accounting system. So let's write this out together in a T account format. DC stands for debit and credit and represents the natural balance for the subsequent accounts in dealer. The first three letters, DEA, has a debit natural balance for those respective accounts. The next three letters, LER, has a credit natural balance for those accounts. So DEA is increased by a debit entry. LER is increased by a credit entry. So once again, DC stands for debit and credit. DEA stands for draw, expenses, assets. LER stands for liabilities, equity, and revenue. Let's move on to some practical examples. In this example, we had a $10,000 cash purchase of equipment. To record this, we need to identify the accounts impacted, the amount, and then reference the accounting equation or DC Dealer to determine how to record this. In this case, the cash and equipment accounts are impacted, which are both asset accounts. Property is increased by $10,000. Cash is decreased by $10,000. Referencing DC Dealer, asset accounts are increased by a debit entry. Inversely, assets are decreased by a credit entry. Because of this, we know that we have to debit property by $10,000 and credit cash by $10,000. Let's move on to the next example. In this example, we had a $1,000 cash revenue for our business. To record this, we need to identify the accounts impacted, the amount, and then reference the accounting equation or DC Dealer to determine how to record this. In this case, the cash and service revenue accounts are impacted, which are assets and revenue accounts. Cash is increased by $1,000. Revenue is increased by $1,000. Referencing DC Dealer, asset accounts are increased by a debit entry. Conversely, revenue accounts are increased by a credit entry. Because of this, we know that we have to debit cash by $1,000 and credit service revenue by $1,000. Let's move on to the next example. In this example, we had a $100 of accrued salary expense. This is money owed for salary of employees. To record this, we need to identify the accounts impacted, the amount, and then reference the accounting equation or DC Dealer to determine how to record this. In this case, the salary expense and the salary payable accounts are impacted, which are expense and liability accounts. Salaries expense is increased by $100. Salaries payable is also increased by $100. Referencing DC Dealer, expense accounts are increased by a debit entry. Conversely, liability accounts are increased by a credit entry. Because of this, we know that we have to debit salary expense by $100 and credit salaries payable by $100. Alright guys, I hope that this content was helpful and useful to you guys. If you guys have any questions or comments or thoughts, feel free to drop it in the comment box down below. If you guys feel like you're in the need for any personalized accounting tutoring services, I also offer those services. Feel free to reach out to me. Alright guys, so good luck in your studies. Continue to ace those accounting courses. And remember, DC Dealer. Have a good one, guys.